Alrighty, guys, welcome back to the channel. Well, I've been coming across a lot of very poor understandings on YouTube recently, and so I kind of want to make a video that kind of clears up the way I use supply and demand. And yeah, I mean, the understanding that everyone else has is very poor, shallow. Their trading strategy is built around it, and so the way I trade is the understanding of how supply and demand and the narrative it tells me about the market. And so here I just pulled up a random market I've been looking at. This is the E-mini Dow. So I'm actually currently looking for longs on this market, but nothing as of right now. Yeah, this market needs a little bit of time. Market's probably going to close here, and the rest of the week we might have a very nice delivery upward. But continuing on with kind of how I use supply and demand, let's get to it. Like, it's very simple. We all know how to find supply and demand zones. However, I use it very differently than any other person. There's very few people that I've actually met that use this properly. And so a lot of guys or traders will go and they'll paint out their little demand zones or supply zones in this case, and they look for their sells. They get their sell, secure, whatever. And so what I do is I step up through every time frame. Of course, time frames don't matter, and if you don't know that, go watch my other videos so you can kind of see how I made a very profitable system just by jumping between time frames, creating a narrative behind it. And so I had my own personal indicator created, but you don't have to worry about that quite yet. And so this kind of tells me the structure and the models we're in a given context. So this kind of tells me what's going on in the market. But long before we had this, I had this indicator coded. I use supply and demand, and I still do. If you go watch any of my backtesting videos, I'm talking about where the supply is, if it's holding, if it's not. And so pretty much all supply and demand does is give you a story. It gives you a narrative about what the market is doing. Now, you don't force that narrative. What you do is you try to gather all the different variables or reasons for you to do something to a market, for you to take it long or for you to take it short, given the narrative that you're building. And so I'm going to replay to, I mean, all this is phenomenal context. Somewhere back here where the market wasn't moving too crazy, like too bullish, so we can kind of say, or we can kind of calculate how I would have predicted this market to continue long. And it's very simple to do. So what I do is we'll start from anywhere on this chart. Just make sure you go left to right. You don't want to start over here and start looking for demand zones right away, because you're not going to get the proper story. You need to look at how the market was moving from left to right, because when we're talking about institutional trading, we're talking about, years to months to days of price action that have built up to this current point, right? If you go back and find, oh, there's a demand right here, let's take it long. Well, you need to follow the story back, because what happens if price came from down here and now we're here and we're falling? This no longer really would be considered a demand zone under my rules. Yeah, it's demand, but how much is this really going to get respected? And that's why we have endless amounts of traders that I see nowadays. We get a supply zone to some extent from this refined wick right here, and they want to take it short. Oh, and then this builds off what I would call 2.0 zone, and they want to take shorts here, and they get endlessly just flushed out. Oh, supply here, guys, let's take it short. Nope. Guys, we have more supply right here. And how many endless amounts of people do you think are taking this market short? What do you think this market's gonna do? It's gonna flush them out, take them out, make them feel like, a little bit of profit, and then they just get smashed through. This is the way the market moves. This is why people lose on the markets every single day. They don't have a proper understanding of supply and demand. And so let's do a complete analysis. What I would do is I start on the monthly chart. And so I look at the models we're in. I studied Wyckoff models for a long time, and currently we're in some sort of accumulation delivery, right? We're just delivering upward. We went through this fractal real reaccumulation on this time frame. We went through a real reaccumulation, broke down, confirmed reaccumulation. What does that tell us? Institutional money is long. Even though this break was super bearish, the follow through was super bullish. So this kind of accounts for that. And you have to look at the size of ranges too. That's why I kind of have this range indicator that I got programmed. And this helps me see the market, well, like what kind of stage we're in, if you want to call it that. And so what I'll do is, okay, I look at the monthly. We're in clear accumulation, delivery. Guys, this market is long. That's all you need to know. Okay, now we step down to the weekly. What's this market doing? Once again, we underwent some sort of reaccumulation, confirmed reaccumulation, continuing long. We're on our first break first two breaks up after a reaccumulation. We got plenty of room to run, especially here on the weekly. So now, even on the monthly, if we want to step back up to monthly, let's go look at the demand. Let's see how demand is holding. And this is how you build the narrative. You don't go back here and you're like, oh, we have supply, short it right here. That is not the story you're being told. How many people, you could have gotten your wins right here, your little sells, but that's not the proper way to trade. This is the worst understanding that I see traders have on supply and demand. They see a supply zone, they want to take it right away. They see a demand zone, they want to take it right away. And that's not what you should do. You need to look at the underlying story. Okay, we're long on this market. Why are you going to take sells on an institutionally long market? Now, I understand. Here, let's replay. Let's not replay. Let's step down to the daily or the 4-hour, and let's see what this looked like here. Here we started undergoing some level of distribution on the daily, right? This is where the market was slightly uncertain. We don't know what we're going to do. A lot of people, this is where they caught their shorts and they secured their 1 to 10s. But how many more times do you think they replicated it? Do you think they got their 1 to 10 sells from here? No, they lost money. Look at this. They got wiped out so freaking quick from these sells. Any of these sells that you try to find, supply zones, whatever, you think they secured their sells? They took a sell here, got taken out, took a sell here, got taken out, and finally they took a sell here and they took a small win. And so the understanding that I see most traders nowadays is very shallow. Like I said, I've been doing this for 8 years. And so when we step back up to the, what was it, weekly or monthly, I start to look at the story that it tells me. Okay, so we broke back down, we have confirmed reaccumulation, we start looking for demand validations or demand coming into this market. I personally have my own way of viewing the market, and so I can teach you a little bit of the way I view it. But you're not going to look at this supply right here with whatever structure you're looking at and try to take sells. That's not what we're doing. What we're doing is we're building a narrative behind it. So we're going to look at, demand came into this market. Not only did demand get supported, right? We came back into demand, got bought up from it. Now I look at mitigated and unmitigated price action. This price action was mitigated. If we look at this S&D right here, this demand, look, it got mitigated by this candle. This means that most of the price action was fulfilled enough for us to continue forward. So what does that mean? We move forward. This demand was mitigated by this price action. This demand was mitigated by this price action, right? You see that? But guess what we also have? We have, this is what I call the 10 zone. Or we can call it the 10 zone, which simply stands for the name of the YouTube channel, or like a 10 block. We'll call it the 10 block for now. The 10 block is simply institutional money stepping in to move the market in a given direction. And so this is let me think about it. I need to put this in a clear way for you guys to understand. Like I said, I've been doing this for a long time, so it's easy for me to understand. But when I try to teach it, it's like, okay, well, how can I say this in a way where you guys are truly going to understand? And so we'll call this the 10 block. And the 10 block is simply institutions stepping in. And inside the 10 block, you can look at it as a large demand or supply zone. That's really all it is. This is a large demand or supply zone. Because if we were to step up to the 3-month, this is, here, I can do it for you. This is going to be some level of demand that came into the market. You see that? Or like the 2-month, some level of demand on whatever fractality you want to look at it. Here's another one. So you kind of have to look at that. This became mitigated. And so the moment we traded out of this demand, came back into it, mitigated this demand, and pushed off higher, that now became valid demand, or demand validations, as I like to call them. So stepping back down to the monthly, within this 10 zone, we have mitigated and unmitigated price action. What this means is that, I'm going to replay a little bit so I can step down lower. What this means, I'm going to remove this zone too, or make it smaller, is that within this price area, we have, you can call it balanced or unbalanced price action. So there's going to be zones that were mitigated and zones that weren't. So if we step down to maybe a 15-day, we can find these unmitigated price zones. What's this? Where did price return to? And so this is the art of refining to very good zones that are more likely to hold than others. There's no other unmitigated price action right here. You have like this kind of what's called a hidden S&D, but it's not really supported. This is the only other place that I could have seen price coming to. And it's not for the purpose of now I'm going to step down lower into here and look for my longs. That is a system I used to trade back in the day with 1 second entries. Believe it or not, yeah, I was profitable with 1 second entries. But it started eating away at me with commissions and spread, especially on 1 second chart. So I moved up to 1 minute, and finally now I'm moving up to 5 minute for scaling purposes. So you can go down in here lower and scalp your longs on what would that be? A 5-day, a 3-day, 5-day? Here, you would look for your entry criteria. This would be my high, this would be my low, and you're taking it long. And hopefully we get a break even. We're already at break even, and you just let this trade play out. And congratulations, you secured yourself however you manage, right? So, what were we on, 15-day? This is our refining. We have our 10 zone, and then within that 10 zone, we have mitigated and unmitigated price action. This means that when you step down lower, more likely than not, you're going to find refinements. And as you step down lower and lower and lower, you can refine to wicks. Wicks are a form of supply and demand. And guess what I see here? This is how I refine, guys, or used to. Now, the understanding that I have from back in the day is still there. It all still works. It's worked for as long as I've ever tested it. These are old concepts that come from very successful traders back in the day. And so I think this specific theory, I forgot the name of the guy, but it was called the box theory. And so I call it the 10 zone because I have a different understanding of what I consider 10 zone. I have different rules around it. You have your amazing pullback rule, which I got from another mentor, from a guy that was teaching me back in the day. And pullback rule simply states that for a 10 zone to be considered one, what you're going to look for is a break of structure of some sort, but you need to look for pullback rule. And what this simply means is you're going to wait for price. To consider a 10 zone, you need to see institutional money stepping in. If you don't see a break of these highs right here, a clear break with a body, it's not considered institutional money under our guidelines because there wasn't enough money to push it lower. This is considered a 10 zone right here, this little zone right here. You know why? Because institutional money was able to break the structure lows. Not only there, I don't know if that broke the body or not, but either way, this one did. And so you need to have at least one body break for it to be considered a 10 zone. What happened here? Body break. What happened here? Well, you can consider all these zones. What happened here? Body break. This is considered a 10 zone. What happened here? Body break. Considered a 10 zone. And so that's how I kind of gauge if it's considered a valid zone or not. This particular indicator does not take that into account. Like right here, this would have been considered a 10 zone, but to me that doesn't matter because I know my rules and I know that's exactly what I'm looking for. So in this particular example, we have refined to the last, points that we want to. And if we want to continue the art of refining, step down to the, what were we, 3-day or 5-day? We can step down even lower and refine to these unmitigated price actions. Now, what we can do, there's nothing clear here besides the wick. The wick, this is what I would do back in the day. This is what I called like my sniper entry. I'd refine to places like these and just set your buy stop or your limit in this case. Wait for price to go under, and then you get limited in, and you're in on this trade. And that's how my biggest runner, I think, was 300R. But of course, once you consider that with partials, I think I'd take a partial at 1 to 25. So I'd still be break even on this trade. Break even at like 1 to 10. So first partial, I think, was 1 to 10. Second partial, 1 to 25 or 1 to 20. And then third partial, 1 to 50. Something like this. And then fourth partial, I think it was 125 or 250, something huge. And it seems incredible, right? It's like no way, especially on a 3-day. But remember, I traded the 1 second. A 1-day candle of this size, if you step down to 1 second, is equivalent to like 250R. My biggest runner, like I said, was I think 350. But it starts to become less and less profitable as you start to scale an account because commissions go up, the size of contracts if you're trading futures or lots if you're trading forex has to go up, and so this is the art that I had of supply and demand back in the day. And so what I'll do is delete all this, and we'll go back up to the what was it, 1 month, just to kind of understand what demand is doing. And so my understanding has evolved quite a bit. Now what I do is I create a narrative behind supply and demand. And so I look at price action. We're pushing higher, we're pushing higher. Clearly demand came in from here. So some sort of institutions or somebody stepping in, buying up this shit. Okay. I probably, if I want to trade this market, probably here, let me think about it. 5. So that'd be on the 5-day. 5-day and then okay, yeah. So assuming you just want to trade this market, whatever, or you're building a narrative behind what the market's going to do next. I see demand coming into this market, holding. I don't care what happens. If we break below here and we have a bullish kind of context where we expect the market to continue going long, for some period of time after this break, I'll consider something called absorptions, which I won't cover in this video because that's a little more advanced. But the basic understanding is demand is coming into this market to some extent, somewhere right around here. Breaks back down, holding, and once again, the concept that I'm not teaching right now, absorbing other demand, intermediary or fractal demand, pushing off higher. Where'd this demand come from? Where did the sells to push longs come from? Unmitigated price action. Look at what we're building here. We're building a narrative of what price is doing. Look, we pushed off this demand right here. Now these are called, or the way I learned to call them is 2.0 zones. And these are super powerful, because we're not only creating demand, returning to it and creating more demand off of these zones. You can consider this a demand, or you can choose to refine it. Last point of refinement for me on this specific time frame would have been here. And these, the more you refine, the less not precise or accurate, but the less times it's going to return to that specific zone. But when it does, more likely than not, it's going to be a very high confluence zone where price is quickly going to bounce off of it. So you're going to be out of the market a lot more, but you're going to be a lot more precise with your entries. I called mine the sniper entry. We're pushing off higher. What do we have here? Right? We have mitigated price action. If you want to look at this specific zone, it got mitigated. So where's the next demand? Next demand, we move up to here. It got mitigated with this candle. Last point of demand was this point. We pushed up higher, pushed back into it. What are we doing? We're absorbing the zone. Lots of buys are coming in here. Lots of buys. This is where I take my entries. Beautiful. And so I'd take a buy stop maybe above these highs, whatever your system is. We're not here to talk about entry criteria. We're talking about the context that we build to know what we're going to do in the market next. And so beautiful demand, left a 2.0 zone, unmitigated price action right here. Like these 2.0 zones, 2.0 zone, 2.0 zone, 2.0 zone, building off another 2.0 zone. Now, this doesn't mean take your shorts and start looking for the market to return to this area, because that's what people do. And that's where you get absolutely destroyed. And so now we'll play it forward a little bit and we'll kind of start to continue the story and show you where the biggest pitfalls are for people. So whatever this might be, putting in some more demand, mitigating that demand. So this is a story I'm telling myself right now. On some fractal level, not on this specific time frame, these wicks were actually candles. If I step down to the 5-day maybe, even the 1-day. Oh, fuck. 1-day. There we go. On the 1-day, these wicks up here were candles. Step back up to the monthly. These wicks right here, the ones I'm talking about. So what does this mean? The story that I'm building. We broke back down, and on some time frame, we put in candles here. What is this creating? Demand. This is a demand zone in and of itself. It's a not very valid demand, or if you want to call it, like it wouldn't be categorized as a 10 zone. And the reason is there was no institutional money that pushed below any of these wicks. Now, if this candle would have come and closed somewhere around here, now it's a 10 zone, or, institutional money stepping in to offload some positions, if you want to look at that. Offload, or if you want to call it weak to strong hands, if you're studying Wyckoff. For me, it's an understanding, right? I don't want to call it anything specific because everyone comes from a different background and it gets confusing. You can call it a demand zone. Some people call it order blocks. The understanding is there. You need to understand. If you understand order blocks, it's the same understanding that I'm going to have, right? You're building a narrative behind it. You're not here to actually trade them, if that makes sense. You're here to understand, okay, order block, whatever the fuck you want to call it. Don't call it that because I don't want to get sued. So I'm calling it a 10 zone. And it stands for the initials of the YouTube channel. The 10 zone is simply giving you a narrative of what's going to happen. So now my instinct is the market's going to continue along. We have demand validations on the monthly. Let's assume you're trading, a 15-day or something. Demand validations are on the monthly, and I can expect pushes off of here. And when this zone fails, we're going to wait for more demand validation. That means that institutions are no longer willing to uphold this price. So let's see what happens. All along here is where I'm taking my longs wherever I can get them. What did we just build, guys? A 2.0 zone. What is this telling us? There is extreme demand in this market to continue pushing it forward. Let's continue. We have a hidden S&D right here. These aren't so important. These more so I use them for management. And so I'll make a video on my management of my specific strategy that I'm building out. And you can go back through my backtesting videos and see how I use that. We're coming back into demand. If you really want to refine demand, where is it truly coming from? Right here. Because what is this zone telling you right here? Lots of selling began here and ended here. Where did the buying begin? The buying began at the low of this range. So the last protected level that institutions are really going to want to protect and buy up from is right here. Let's see what happens. I actually don't know. Okay, we start getting bullishness come off this demand zone. This is where I'm looking for longs. All this area, beautiful for longs, beautiful for longs. Okay, we mitigated this demand zone. Now we're looking at this 10 zone. This is a valid 10 zone, this area right here. Why? Because we broke the low of the body, the wick with a body. There you go. And now we're pushing up higher. What is this 10 zone telling me? Right here, just this zone. What is this telling me? As we break above it, it's telling me that endless amounts of money are being pushed into this market, right? And then another thing, I look at the market very fractally, but I've been doing this for years. This break right here, you see that horizontal line? You see how we pushed below price and then pushed back up above it? What do you think that is? Right? That in and of itself is going to be another fractal on another time frame. If I paint it out, something like this, or even if I want to refine it, let's see if it was mitigated. It technically was mitigated. So this zone, if I step down to a 15-day, what is it going to be? Demand. Look at this. Push back into it, a 2.0 zone off of this candle. This was the last unmitigated price action, pushing up higher. So maybe if you jump between the 20-day, this is unmitigated price action. We pushed away from it, haven't come back to it. That is extreme demand, guys. This is what people fail to understand. It's not about waiting for price to come back to your zone and then you start taking your longs. That is how I used to do it, and it works very well. But it's also not about, guys, we got a supply zone right here. Refined it to the last point. This is my sniper entry, and we're going to take it short, guys. No, you have to create a narrative behind what price is going to do. You can't want to take sells on a long market. You're going to get shit-faced. And that's why I trade trending markets, of course, because that's when I know that my edge is going to play out in a market where I know demand is going to hold. How many people, if you step down to the daily, we'll do 5-day because I don't know. How many people do you think saw this break of character, change of character, break of structure, whatever the fuck you want to call it, and started taking sells here? How many endless amounts of people do you think lost funded accounts, lost so much money doing this shit? That's why people do not truly understand supply and demand, because it's not just about supply and demand. It's not, seeing a break and taking the market short. It's not seeing a break and taking the market short. It's the underlying story that is behind what the market is telling you in this moment. This break right here wasn't to go short. This break was for institutions to not only build off other demand. Look at this. It's not only to build off other demand. We have 2.0 zone after 2.0 zone here. This is the narrative that it's telling me. 2.0 builds off of the 2.0 and leaves the final unmitigated 2.0 zone. This isn't for price to return to this zone in the future. I'm not expecting at all for price to go here and then go up. What it's telling me is the buying is so strong that it doesn't even have the potential to return to the demand zone. Because more likely than not, when you've displaced this far and you return to the demand zone, at that point, it's no longer to mitigate the demand zone and continue bullish, it's to break down through it. And that's where a lot of people have misunderstandings. They'll go back to zones all the way back here. All the way back here. They draw like fucking 50 different zones. And then when price returns to it, down the future, because we're now in distribution, we changed models, and now we're in a Wyckoff distribution. They start taking their longs here, and guess what happens? Kadoink, they get liquidated. They start taking longs here. Well, they get chopped out. Oh, now we're building some sort of Wyckoff accumulation. We're having 2.0 zones build off of each other, getting liquidated, and then you have your long market. This is a completely different understanding, guys. Please don't fall into this trap. I see all these YouTube videos, all these so-called gurus and professionals trying to teach you guys this garbage when they don't even do it themselves. And so that's why I kind of created a free YouTube channel to help you guys out, because I just see all these endless amounts of people losing money. And people ask me, well, why don't you use this demand zone? It's like, well, that's not the understanding, or this supply zone. So many people lost so much money here. Once again, let's continue, and then I'll wrap this up because I don't want these videos to get a little too long. So what's this narrative telling us right now? The thing where my eyes go to immediately is this sort of demand validation. That's all I'm looking for. I'm not looking for sells here into this zone. I'm not looking for buys when it comes into the zone. I'm looking for longs. It's the story behind what this market is telling me. I'm looking for longs, not in this zone, in general. And let's see what the market does. I would have gotten my longs. And guess what? I'm not waiting for the market to return here. Now look at this. We built off demand off of this zone, and we're starting to fail. It's not even absorption. We are falling through this demand. And so what am I doing now? Nothing. I'm not painting out the 50 different zones down here, all the refinements looking for longs. What did this last here, let me make this a little bigger. What did this last break of fractal demand tell me? It's telling me that price is no longer supporting this range. So why am I going to be taking longs right now? I'm going to wait for more demand to come into this market. Validated demand. What is this? This is demand. What am I doing now? Looking for longs. Now, how weird that price did come to this exact demand that I highlighted and then built off a 2.0 from it. It's almost as if I was anticipating that, right? I'm not drawing all these other small weird zones, and it comes from experience. I've done this so long that I kind of know what size of zones, how I'm expecting for them to hold, and then the narrative that's building off of them. We just had demand coming into this market. What is this telling me? I'm stalking longs. I'm waiting for this. I'm waiting for a stage 2 now. Delivery, early stage 2 of Wyckoff. I want to see just this money go, go, go. And what do you get? You get a very beautiful delivery. Once again, what did we do? Came back to the 2.0 zone. What are we going to do from here if the institutions want to uphold this level? We're going to get new demand pushing the market higher. We get absorptions. Now we're looking at the 5-day. We were looking at the weekly, but I guess now we're looking at the 5-day. We get absorptions of zones. What did we just do? Built off demand. We're building a beautiful narrative for this market to continue long. Let's see what happens. We continue long. We continue long. What were endless amounts of people doing right here on this supply zone? Selling, selling, selling. What happened to the market? They got liquidated so fucking fast. And so, yeah, this is the understanding that I have behind markets. The last 2.0 zone was down here. I'm not expecting for price to return here. I'm not looking for sells right here. What are endless amounts of people doing right now on lower time frames? Let's go to a 5-day. We'll go through to a 3-day. A 1-day? What are people doing here? We had our change of character or break of structure, whatever the fuck people call it. I don't care what it's called. What are people doing here? People are taking endless amounts of sells, especially on a daily. What's going to happen? I can already tell you what's going to happen. We have beautiful demand here, which is telling us a phenomenal story. We have some sort of accumulation. Currently, it's considered distribution, but given the context, I would consider this some level of accumulation model. We have demand coming into this market. What's going to happen? We're going to get bursted through, comes back to demand. All these people maybe got lucky with their sells. Let's suppose some people waited until the market changed on a lower time frame and they got their sells. But what's going to happen now? You know, if you apply this psychology to every single market or to every single market condition, what happened here? They tried to for their sells, maybe got a partial, maybe got a break even, lost. New supply. I'm trying to find zones that look clean. Supply, maybe got their partial, then got taken out so quickly. What happened here? Supply got put in, boom, they got wiped out. Supply got put in, boom, they got wiped out. Supply got put in, boom, they got wiped out. And if you apply that, yeah, it's going to work under some conditions, but what's going to happen the majority of the time, they're going to get wiped out so quickly. So I think we were on the 5-day. 5-day, look at what happened. Came back to our 2.0 zone right here. What's going to happen next? More likely than not, if institutions want to protect these key levels, boom, we get our bulls. What happened to all the people that were shorting here? Look at these. They got wiped out so quickly, okay? So last 2.0 zone that was left on this particular time frame was this. Now, if you want to jump to like a 4-day, it'll probably be a little lower. This. Nope, that's still mitigated. So yeah, this is the last point that I'd be looking at, but I'm not looking for my sells or anything like here. Like people, once again, on the daily are seeing this breakdown, change of character, whatever you want to call it, and they're looking for their beautiful sells. They have their beautiful zone refined to this very last point. They're like, oh, it has to hit here. What's going to happen? Price is just going to smash through this. Whether it comes and hits demand first or not, it doesn't matter to me. I know what's going on in the market. Hits demand. We're mitigating some sort of price action. We're pushing up higher from it. Leaving 2.0 zones. This beautiful 2.0 zone traded above it, came back to it. We're going to burst through it. We're going to burst through it. It's just a matter of time. And people here took their sells, got chopped out, took their sells, got chopped out, took their sells, got bursted through. Let's look at the, what were we on the 5-day? What did we do on my time frame that I was looking at? Hit demand. What do you think is going to happen next? We're building off, I mean, it's a wiki market. We're building off more demand. What is this narrative telling me? Beautiful demand right here. This market is telling me it wants to go long. Supporting, absorbing the zone. Now we have, nope, that's mitigated demand, so it doesn't matter. We're going to start falling down. Beautiful. Delete all these zones. Where were we on the monthly? Let's see where, what the fuck? Okay. Oh, fuck me. Okay, so once again, it's the narrative that this market is telling you. Demand coming into this market. What do I know on the higher time frames? We want to see bulls. Why? Because the monthly is also putting in beautiful demand. I don't know where we were on this chart, but we were somewhere down here. We want to put demand into this market. We want to put more demand into this market. I'm just waiting for demand validations on the, I think we're on the 5-day. On the 5-day, what's this story telling me? A lot of people will step down lower, like they'll see this change of character, whatever they want to call it. Currently, this is a Wyckoff accumulation, so weak to strong hand transfer. They're gonna try to take their sells here. It might work, it might not. Then we start to see demand. I'm not even looking for sells here ever. Why? Because the higher time frame is telling me a narrative. It's telling me that this market wants to continue long. Then we break back down. Nothing to do, nothing to do, nothing to do. Demand's coming in. Demand puts in a 2.0 zone. This is the last 2.0 zone. This is a phenomenal, very big, but phenomenal 10 zone. What's this 10 zone telling me as soon as we trade above it? Demand is holding up the market. We're looking for longs. Not only do we have the confluence of a 2.0 zone building off, but we have a 10 zone being validated, followed by another 10 zone being validated. What is that telling me? Extreme bullishness into this market. More demand coming into this market. Mitigated right away, pushed up quicker. Came back, pushed up quicker. What did we build from here? 2.0 zones. What do I know the market wants to do? Push higher. What did this build overall? A 10 zone. What is this 10 zone telling me? That the market is extremely bullish and wants to continue long. What did we just build off right here? A zone, a demand zone. What could happen? Number one, price is going to fly up. Number two, price is going to tap and then fly up. That is all I'm anticipating. I'm not trading off demand zones. I don't do that anymore. It's the narrative that tells me that. Now, very profitable, you can jump into here and scalp your longs up. I don't do that anymore. I look at the narrative that the market's telling me. 10 zones start to fail. We have some sort of bearish 10 zone, if you want to look at it this way. You can look at this as a big supply on a monthly time frame, for example. Big supply coming into this market and it's holding. Does that mean I'm going for shorts? No. Why? Because the monthly is telling me, nope, demand is holding from all the way down here. Demand is holding from all the way down here. Why are we going to start shorting a market where we know we're long? Right? Came back into demand. Even though we have our sells here, the most important thing that you guys can probably take away from this, and my biggest learning experience with this, was the price delivery. So counter trend trading is what people call it. The price delivery on counter trend is the nastiest price action you'll see, for my experience. Look at these wicks. Wick, 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 wick. It's just not clean price delivery. If you know the higher time frames going bullish, why are you going to take sells? Why? No, look, wait, be patient. You know, trading is a game of patience. You're going to wait for the market to do what institutional money is doing, right? So look for your longs, wait for demand to get hit, wait for your 2.0, for your 10 zones to get hit, whatever you have to wait for. But don't fall into this psychology where people are, taking their sells here. Oh, we had a supply zone, guys. We have to take the market short, like change of character. No, not at all. The complete opposite. And I don't know if you guys are in mentorships or whatnot. Go into your mentorship and see if they have a zone painted like this. Guys, we had a change of character. We broke down under all structure, very bearish. We're going to be looking for shorts this week. How well did that work out for you? How well did that work out for you, right? Guys, we had another break right here. We're going to retest for shorts right here. Yeah, how well did that work for you, right? Guys, waiting for another bearish break. We have our supply zone up here. Yeah, how well did that work for you? Like, I see all these people getting flushed out. You go on different mentorships or groups, and it's like they're trying to do the complete opposite of what I'm doing. And I'm just like, are you guys not seeing this? I'm not waiting for my supply zones to hold right here, supply zones to hold right here. No, I have my story. I'm waiting for my demand to hold right here. Oh, my bad. Right here. Gonna take it long. Waiting for my demand to hold. Beautiful. It didn't return to the demand. That doesn't mean that I'm shorting all these shorts waiting for demand to get hit. I see people draw like all these fucking zones all the time, and they're like, okay, so when the market's here, we're gonna hit here, the supply zone, then we're gonna hit this demand, and then we're gonna continue long. Absolutely not. When one or the other, bulls or the bears, are in control, why do you think they're gonna lose control here, come back here, and then the bulls are gonna gain control here, and then we're gonna take the market long and life is gonna be good? That is not what the market's about at all. If the bulls are in control, why are they gonna lose all their power at some little supply zone when institutions and the money's literally telling you where it's gonna go? You can look at it as just 10 zones. If this seems a little complicated, look at 10 zones. 10 zone, 10 zone, 10 zone. What is this market telling you? Longs, longs, longs. If you get confused and you see a bearish 10 zone, right? You start to see, here, let me delete these. You start to see bearish 10 zones right here. And you're like, guys, like the market might be reversing. Oh, another 10 zone, guys. From here to here, from the low to the high, by the way. From here to here. And guys, another 10 zone. Actually, no, this didn't validate. So 2 10 zones. Guys, I'm scared. The market might be going short. Step up to the monthly or a higher time frame. What is this market telling you? This market ain't telling you short at all. This market is telling you beautiful demand coming into this market. Stock me for longs. Okay, I might be a little bearish right now. That doesn't mean take sells. Bearish on this time frame or bearish on the other time frame is very bullish for this time frame. You see that? And you wait and you're patient. Oh, demand's coming back in. What could that mean, guys? Oh, longs. Boom. Look at the higher 10 zones on the bigger time frames, right? 10 zone right here. Huge 10 zone. Gets validated so quickly. Pushes right through. What is this telling you? Money's coming into the market. This is super important. Anyhow, I'm going to be working on making my videos a little shorter. I know I ramble quite a bit, but it's my first time teaching the concepts that took me years to learn. So might be a little rough start, but hopefully that is a half decent understanding for how I use what I call 10 zones now. 10 zones or 10 block, whatever you want to call it. And then the story. Once again, do not take sells here. This market is not for sells. Step up higher to time frame, build a narrative behind what the market is doing, and do that. Okay. Anyhow, guys, you enjoy your afternoons, your days, whatever, and I will see you on the next video. All right.